Following are the details regarding capital structure for company. You're requested to determine the weighted average cost of capital using book value. Tax rate is 40%. Company expects dividend of rupees 10 per share and the market value is 200 per share. Growth rate is 5% forever. So we have enough of data to use the dividend growth model for calculating KE. Okay, so cost of equity is equal to D1, that means next time's dividend, upon P0, which is the current price, plus G. So that is going to give us 10 upon 200 plus G, which is 5%. Okay, so 10 upon 200, if you do on the calculator, you should get maybe 0.05, but let's be sure. Okay, so 10 upon 200. Okay, 0.05. 0.05. Similarly, 5% means 5 upon 100. So if I do 5 upon 100, I get again 0.05. 0. Okay, so plus 0.05. And therefore my KE is 0.1. And if I multiply this by 100, I will get KE as 10%. Okay, do it on the calculator. 0.1 into 100 will give you 10%. Now, I have preference share and retained earning cost of capital given to me. KE I have just calculated. And as far as KD is concerned, you always have to check whether it is after tax or before tax. If they don't say anything, we normally assume it is before tax because they will also give us the tax rate at 40%. Okay, so it is the interest rate, open bracket, 1 minus T. So the interest rate is, in the case of debentures, it is 10%. So it's going to be 10%, open bracket, 1 minus the tax rate. And the tax rate is 40%. Convert everybody into decimals. 10%, 10 upon 100 will give you 0.1. 1 minus 40 upon 100 will give you 0.4. Okay, and then finally 0.1 into 1 minus 0.4 gives us 0.6. Okay, so 0.1 into 0.6, if you do in the calculator, you should get 0.06. Okay, so therefore KD is equal to 0.06, and if we multiply it by 100, we'll get 6%. Okay, so KD is equal to 0.06, which if we multiply by 100 gives us 6%. Now, we have the data to calculate cost of capital. Okay, so we have source of capital, we have amount, they're calling it book value, you can call it either, no problem. We have weight, cost, and purposely doing this. Okay, weighted cost. Right, so again, remember to use pencil and scale. Okay, a lot of this I'm just copy pasting from upstairs. Let's see. So we have debentures, we have preference share capital. Okay, so preference capital, equity capital, and retained earnings. Alright, so now we are in a position to calculate total. Let's see. We have 40,000, 20,000, 60,000, and 20,000. And we add them all up. So 40 plus 20, 60 plus 60, 120 plus 20, 140. Please use a calculator to cross check. Okay, I will also do the same. So here we go. We have 40,000 plus 20,000 plus 60,000 plus 20,000 gives us 140,000. Okay, now the costs for debentures we got over here as 6%. Okay, so I'm just going to write it as 6%. The cost for equity share is here. Okay, so equity share we have 10%. Preference share we can pick up 8%. 8% retained earnings 9%. And now to calculate cost, we will take each and every individual amount and divide it by the total. Okay, so we on the calculator will take 40,000 upon 1,40,000 equal to, okay, and it's going to be not exactly a perfect non-terminating decimal, so I'm guessing up to 4 decimal places. Let's do it. 0.2857. Okay, and frankly 2 decimal places is killing it. Okay, but still let's do it. 0.2857. Similarly, 20,000 upon 1,40,000 should be half of what we just written, but let's recalculate. Okay, so 0.1428, and this is 5 or more than 5, so we'll make it 0.1429. 0.1429. Okay, 60,000 upon 140,000. Okay, so 0.4285, and this is 7 is 5 or more than 5, so it will become 0.4286. Okay, so 0.4286. And 20,000 upon 40,000 we already know is 0.1429, and now we multiply both of these numbers. Okay, we multiply weights into costs. Now we have 0.2857 into 6. Do not press the percent button, just write this as it is. So 1.7142. Okay, so we have 1.7142. Okay, now we do we'll do 0.1429 into 8, which gives us 1.1432. So 1.1432. Okay, similarly, the next one, it's straightforward, but I'm still going to do it on the calculator for those who are weak in maths. Okay, anything multiplied by 10 shifts the decimal place one step to the right. So 4.286, and we have 0.1429 into 9, which gives us 1.2861. Okay, 1.2861. And now we add them all up. So 1.2861 plus 4.286 plus 1.1432 plus 1.7142. Okay, so 8.4295, and I'm guessing that's 8.43 should do. Okay, total is 8.43%. Alright, so therefore weighted average cost of capital is equal to 8.43%.